Is investing in foreign exchange a good idea? Normally I keep this sort of, information relegated to my Instagram account and Twitter. However, I think this might be interesting to talk about because my foreign exchange trades have been doing really well lately, and I've only been in them for like a month and a half tops. It kind of started when I heard a lot of people talking about the Bank of Japan, and I was like, oh, okay, that's interesting, but I'm in American stocks and I live in Australia, so the global economy is interconnected, but it's not like I've got too much money wrapped up in this. And then I saw some chart of the strength of the US dollar compared to the Japanese yen, and I'm like, wait a minute, my stock trading platform allows foreign exchange investments, maybe I can get onto this. So my first foreign exchange was basically betting that the US dollar would continue to strengthen against the Japanese yen. I won't go into the details here because I want to keep this quick and short. If you want more information, check out the Twitter or Instagram seen on screen. But basically, the US dollar was really strong against the Japanese yen compared to recent years, and it looked like it was only going to keep going up. So I got in, and yeah, it's paying off. But then I figured, maybe there's other currencies I can have a look at too. So at the moment, my foreign exchange investments are basically betting that the US dollar will continue to strengthen against the Great British Pound, the Euro, the Japanese yen, and the Australian dollar. So let's briefly go into each of these, because obviously it's extremely complicated, as you can probably see if you check out the Instagram and Twitter posts, but we'll just briefly go over it here. So as for the euro, the European Central Bank is the one who, has authority over this. And the head of that is Christine Lagarde, and she's extremely behind the curve. So in the Eurozone, rates are basically at 0%, and now they're only just looking at raising them. They should have done this a long time ago. And coupled with the rampant inflation in the Eurozone, well, in most of the world, I think Switzerland's only just now increasing, but same with China. But why the inflation in those countries aren't increasing anywhere near as bad as the rest of the world is because during the 2020 pandemic, those countries didn't have excessive monetary policy. So if you know Milton Friedman, basically inflation is always and everywhere a monetary phenomenon. So it's got a little bit to do with government policies and whatnot, but primarily if you inject a lot of money into the system via the central banks, you'll get inflation in due time. So that's why inflation isn't that bad there, but we'll pull back to Europe now. The ECB obviously pumped a lot of money in, which is why all those countries in that particular area have high inflation. Now also, the European Central Bank covers 19 countries as opposed to most central banks that only cover one. So why this matters is each of those countries will have different fiscal policies, which is basically the government, but they'll only have one monetary policy from the European Central Bank. Now, some of these particular countries that the European Central Bank is in charge of have a lot of debt. So the ECB can't really raise rates because this will put further stress on these particular countries, because if they raise rates, the cost of their debt will get more expensive, and they already have so much debt as it is. It will be really unfortunate for those countries, even though it's obviously only going to get worse with inflation. But yeah, they're stuck between a rock and a hard place. They hindsight is 2020, but they definitely shouldn't have printed that much money, and they shouldn't have kept rates that low for that long. So I don't think the ECB is going to raise rates because of this, because it'll put further stress on those particular countries. Also, the cost of energy is going up because of the whole Russian gas situation. I know Germany's in a lot of trouble with getting energy, and I think Italy is also having problems. It's kind of hard to keep up with everything off the top of your head, but basically the European Central Bank is probably not going to raise rates because of inflation, because of the fact that they're in charge of 19 countries at once with different fiscal policies, and the energy crisis there as well, and the fact that some of those countries are so highly in debt, it would be extremely damaging if the rates were to be raised. So this is why I'm going to keep my bet on the euro going down compared to the dollar. We reached parity recently, and it's probably just going to get worse. So that's why I think the US dollar will continue to strengthen against the euro. Now, the Bank of England is in charge of the Great British Pound, and their inflation figures are pretty bad. They just had their GDP report come out recently, and it was kind of up, which is a little bit unusual. But if you look at why it was up, it seems a little odd, because basically one of the metrics they use is doctor's visits. So, if more people go to the doctor, it looks like that the country's doing better from a financial perspective. So that's a little bit unusual. Other countries don't do this, but anyway. So there's speculation that they're going to raise the interest rate by 50 basis points next meeting, which is in August. So they're quite behind. Inflation is only going to get worse in the UK as well. Their inflation was at 9.1% last time it was measured, which is what we got in the US recently. But based on everything I've seen in the UK, it's only going to get worse. And we're unsure of who's going to be the next Prime Minister since Boris Johnson recently resigned, although he's in charge until like October or something. But it seems that whoever is going to be the next PM also doesn't really know how inflation works. So this is why I'm going to continue betting on the US dollar to go up against the Great British Pound. So the Reserve Bank of Australia is in charge of the Australian dollar. And this trade's going well at the moment, but you can tell by the amount of money I put in, I wasn't super confident with this trade. The reason is, for most of the time I've been looking at the exchange rate between the US dollar and the Australian dollar. Most of the time it's hovered around $1.37 to $1.45 for like $1 US to Australian dollar. And when I first looked at this foreign exchange trade, it was hovering around $1.45, and I was like, yeah, that's pretty high. So I bet on the US dollar going down, and then basically that trade failed, so I reversed it. And then now it's still working. So I always assumed the RBA was somewhat ahead compared to other countries because, although they're still behind, they seem to be ahead compared to other countries based on the fact that one of their first rate hikes was 50. They went from like 0.35 to 0.85, whereas most other countries sort of only went by 25 before they got to like the 1% interest rate. But that could just be how I'm looking at it. Other people probably see that as being behind, but so is every other country. So for those of you who aren't in Australia, the construction industry here is getting absolutely destroyed. There are so many builders that are going out of business because what they do is they sign a contract to build a house on a fixed price, but in between the time they sign that contract and get to building the house, the price of materials go way up, so they're basically building houses at a loss. So they're all going bankrupt at the moment. And they've recently pled with the RBA to slow down their interest rate hikes, even though it's really not that much. And they're going to need to do a lot more to curb inflation here in the land down under. But with trades basically being the most important industry in Australia, the RBA may slow down because they may be under pressure from government agencies, because they will be under pressure from trade unions. Now, I don't know the likelihood of this happening. I assume that they would continue to raise regardless, and the pleas from the construction workers would fall on deaf ears, but never underestimate the power of unions here. But even all this aside, Australia is still behind, as well as the fact that the Australian dollar isn't as strong as the other currencies. Like, the Australian dollar isn't as strong as the US dollar, for example, but it's also just not as popular as, it's not as large as other currencies like the yen or the Chinese yuan or the euro or the Great British Pound or the US dollar. So that's another factor that plays into this trade. So yeah, the US dollar naturally dominates the Australian dollar regardless. Now, the RBA meets around July 27th for the next meeting, which is roughly the same time we're going to get GDP figures in the US, and we're definitely going to see another quarter of negative growth, so a recession will be confirmed right then and there. But yeah, we're unsure of what the RBA will do in their next meeting at the moment. But irrespective of that, I reckon the US dollar will still continue to strengthen against the Aussie dollar. So the Bank of Japan is in charge of the yen, and that's weakening relative to the US dollar because the Bank of Japan has a large difference in their interest rate compared to the US dollar. The weakness primarily stems from widening interest rate differentials between Japan and elsewhere. While the rest of the world, led by the US Federal Reserve, is raising rates aggressively to tame soaring inflation, except if you're Christine Lagarde at the ECB or if you're in charge of the Bank of England. But regardless, the Bank of Japan has doubled down on its easy monetary stance. Now, I don't see this changing anytime soon. I'm not exactly extremely well versed in Japanese politics or anything, but based on what I have seen, it looks like they're not actually going to change this, especially because inflation in Japan isn't too bad. Now, I've seen some information about Japan's economy, and it's quite different. Basically, their central bank owns stocks or something like that, which causes their economy to operate in a slightly different manner. This is something I'll have to look at, but again, it's part of my increasing the investing stat. But the data I have seen, I didn't take notes because it was so complicated, and it was roughly around the same time as I had my exam coming up. So obviously I'm not going to ditch my exam study to go and take detailed notes on Japan's economy, you know what I'm saying? But another thing I've seen is their inflation was basically non-existent for several years, so I guess they kind of want it. That's something that I did see. I don't exactly know the full story, but I did see something like that. So that's yet another reason that plays into my conviction that the US dollar is going to continue to strengthen against the yen. So I'm going to keep holding this. So yeah, in my opinion, these foreign exchange trades will likely continue to be profitable. Now, what I've done is I've gone onto eToro, which is one of the only investing sites you can use here in Australia. And I basically did a 30x leverage because I was pretty confident that the direction these trades would continue to move up. And so basically what that does is for every cent it moves, it actually moves 30 cents into part of that trade. But obviously if it moves down 1 cent, it'll move down 30 cents for that trade. So yeah, it's pretty risky if you don't know what you're doing. And in fact, I did the 30x leverage on my first Forex trade between US dollars and Australian dollars, and I got liquidated. So I lost about 150-ish US dollars, but that's my own fault. I basically made a trade off assuming that $1.45 was as high as the US dollar was going to get against the AU dollar. That was literally all the research I did. So obviously not very clever on my end, but you live and learn. There's obviously a lot more to foreign exchange than just a couple of numbers that you see a lot. So is it too late to get into these? No, but one thing I will note is the Maverick of Wall Street has been saying a lot in his videos. Well, it's mainly him that I've seen, but you can obviously just go onto the chart yourself. If you look up the DXY, the Dixie Dollar Index, you can see it's quite overbought, so it is due for a pullback. But the problem is there needs to be a reason for the pullback, and it seems that there's going to be no reason for a little bit longer. But even then, even if it pulls back a little bit, I don't think my trades will go into the red. They might go into the red because of the whole leverage thing, but even then I just don't really see that happening because of the fundamental reasons I just said. So if you want more info on this stuff, feel free to check out the Twitter and Instagram posts. And then from there, it'll prompt you to go and do your own research. This is just a really quick update. For full context, I just finished recording the audio for my little salary increase update. And I was like, well, I'm already in this car and I've got some spare time. So I'll just go and record this next video, which is this one you're seeing now. So hopefully none of it was too confusing, and hopefully I made sense. If I didn't, check out the Instagram posts for, I guess, more clarity, because again, I've kind of just freestyled this one. But the point stands, the US dollar is probably going to continue to get stronger against these currencies. And obviously, crypto is a bad investment at the moment. Stocks are kind of all over the shop. Like, you can kind of short some stocks here and there, but sometimes they have rallies and then that throws off your short position. And obviously, you can't just go and invest in real estate. Like, you need a lot of money for that. And even then, real estate's probably going to drop a little bit. So it's probably best to wait if you are in the rare camp of people who actually has the money for that stuff. But here's just a quick little update, increasing my investor stat and increasing my online brand stat. So anyway, any questions, feel free to leave them in the comments section. I'll answer them the best I can. But anyway, that is all.